Ladies and gentlemen, Kei Kim here. Welcome to the market update. Hope you guys had a good day trading today. Market is looks like slightly down here, 0.2% negative on the S&P. Nasdaq is up about 0.3% there. Looks like semiconductor is deeper green today with the 1.2%. Small caps is also up. Looks like the biotech is up about 2%, emerging market about 1.2%, everything else slightly green, slightly red. We got treasury bond up a little bit, VIX is down 3%. Looks like gold is also flat. Grayscale Bitcoin caught a bit there, about 4% positive. We're going to add Apple on tonight's analysis. Apple's down about 0.45%. Let's go to the 65-minute chart and do a follow-up analysis before we come back here. There were gaps here. There are these two gaps that got filled. There were gaps here. There were gaps here. So we talked about this on the last night's update that these gaps were going to provide cushion. And actually, the best case scenario for the bears were to gapping it down. And so I think that's why we were able to fill both of these gaps today. There's a gap here and there was a gap here. You see that how both of those gaps got filled today because the sellers were managed to bring this market with the gap down. So that gap down is going to push a little further, right? And then once that gap down happened here, you can see that we continue lower on the first hour, but it stopped where? Just right on that gap area. How are you going to navigate this market not understanding these things, right? You can see that right on that gap area coinciding with that short-term pivot, right? And what happened was with the gap down, I've also mentioned it yesterday that best case scenario for the bears will be gapping it down and turning this into a what? Island top reversal, and they did that, but the bulls realized that's too risky for the buyers, leaving that gap open because then it will be a textbook island top, and that's going to you know what I'm saying, keep that selling momentum to continue, even getting into much harsher environment going into next week, and bears might even come down here trying to fill this gap. So bulls realized they needed to fill this gap as quickly as possible so that the gap was filled on the second, third, and fourth hour. You can see that right here. Once that gap was filled, that bearish island top reversal is no longer viable as of today. That dream has been passed. However, with that short-term moving average, though, that has been acting as support, now it's been acting as resistance for a couple days here. So it looks like on yesterday here, you can see resistance. And today, when the gap gets filled, and if you've been following me for a while, you guys understand when the gap gets filled, what happens to it? It's going to act as instant resistance. If it's a down gap, resistance. If it's up gap, it's support, right? That's why when this gap, again, that's an up gap, right? This is where it closed. This is where it opened next day. That's an up gap. Once the gap got closed, what happened? It acted as instant support. Here, there's a down gap. It got filled. What happened? It acted as an instant resistance coinciding with what? My short-term moving average. No surprise, we're going to see a little bit of a decline towards the end of the day once that gap got filled. But trust me, for the buyers, it is so much better that you guys fill this up gap or that down gap, which is potentially an island top gap, got filled so that it slowed down the selling pressure. It would have been so much more severe selling pressure would have happened if this gap wasn't filled today. So quickly, buyers took care of that business and then realizing there's a short-term moving average gap just got filled, and then you can see that it started to pull back here. So here's what's going to happen right now. So I put a Fibonacci level here, so you can see from here, that's the peak, that's the lows, and with that, right on that first level of Fib, this is where we found support. Well, again, coinciding with that short-term pivot and the gap area, right? So that definitely was an important level this morning. We found support. We're trying to probably coming back down here. So this is what I'm going to do. I'm going to put this here and here, right? So you got 388, 385 as the next potential support. What the bears need to do, obviously, at this point, is that bears need to cultivate on this. So we got, let's call this micro-term downtrend. We got the micro-term downtrend. We got the micro-term lower highs and lower lows. And bears want to continue in this and continue to come back down and continue to cultivate the lower low. That's why I'm giving you 388, 385. 385 is probably going to be a stronger support because we got 50% Fibonacci retracement level, my midterm moving average residing in that vicinity, and the gap area support. So this level is gonna be a strong support. What the buyers need to do, find support at 388 or 385. It would be better finding support at 388, not letting the bears cultivate the lower low. And sometime next week, bulls want to reclaim this short-term moving average like we've seen here. You can see, I'll go back. You can see right there, resist short term. You see that short term moving average? Resistance, 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 resistance. What happened? Right there. Reclaimed it, held above it, first 2 hours. We made a run, came back, and that short term moving average has already been converted. It's converted to bullish team. And you can see ever since then we made a nice bullish move to the upside after that, right? So that's what bulls want to do sometime next week. It's going to take some time. It's not going to happen, that quickly unless there's some kind of shenanigan gap up from the buyers. Then, and holding that gap would really, expedite the process to the upside. Currently I think in the micro term, let's say micro term, we're bearish. In the micro term, we do have these micro term lower highs and lower lows. So in the micro term, the sentiment is bearish. But I think the short term, I still want to kind of still stay more kind of to neutral, to maybe slightly more bearish because you can see we're still below that short term moving average. And once we reclaim that short term moving average, the sentiment will shift back to bullish in the short term. Obviously, in the midterm, we want to continue to give benefit of the doubt to the buyers in the midterm. Check out that oscillator here. So oscillator it looked like it was potentially wasn't a cross when the market was up here, but with that last 2 hours of fade, basically right now indecision, we're just kind of sideways. And we still have a little bit of more room to move, but bears can actually still bring it down if they really choose to do so. That's why we got 388, 385. So let's see how the market plays out next week. Obviously, we'll follow up on this on Monday after market close. Let's come back to this daily chart. We've been following this, tracking this rising pivot for some time now. It's been continuing to act as that strong pivot. Pivot means prior resistance, now acting as new support. So that's a good sign. So in the long term, are we bullish or bearish? In the long term, looking at things long-term sentiment, are we cultivating higher highs and higher lows? Yes. Are we above a pivotal level? Yes. Are we continuing to cultivate that new highs here for that trend to continue? Yes. Right. And if I zoom in here, and looks like we are finding, for now, looks like you can see that my short term, this is my short term on my daily chart. Obviously, they're different. My short term on my 65-minute chart versus short term on my daily chart, they're different, obviously. This is kind of like equivalent to almost like a midterm on my 65-minute chart, a little bit tighter though. So on that short term, looks like it does have some resume here. It does look like that short term usually does, it's going to have that initially acting as support. If we do lose it, you can see that by midterm it's just underneath that. And last couple of times when we did see these pullbacks, we saw that back in late January, and then mid to late February, and both times that midterm moving average was able to scoop it up. And currently we're hanging out right on that short-term moving average. We got that doji candle there. The doji candle doesn't mean anything as of now unless this thing sees a gap up or something like that. So if we do see a gap up, because you can see this was a gap down. Let's say on Monday we see a candle that looks like this and hold it all day and close the day with positive candle looking like this. That's what we call the morning star reversal with that, bearish candle and a doji and a gap up and then sustained green candle. If we see something like that, but as of today, we don't know much how the market is going to behave. We have to kind of come back and see how the market is going to behave next week. But you know what? I want to continue to give benefit of the doubt to the buyers in the mid to and long term. We're still in an prime, long-term uptrend here, and market has been grinding, right? Pretty much moving sideways ever since that, this was that election week ramp, and ever since then, or since early November, it's just been moving sideways. That's not a bad thing. Again, market likes to consolidate in this fashion, right? We saw something like this here, sideways. Wasn't that a sideways? That definitely was sideways, and then we definitely saw the rally later, right? And then you can see we had kind of sideways here, right? That's a sideways. And then what happened? Oh, there the rally came about. Looks like there was kind of a sideways move here also. And it's been kind of the sideways and higher type of move. And this kind of move isn't a bad, and obviously we talked about the great rotation, which I called it since about November of last year. So we've been in this great rotation for about November, December, January, about 5 months or so. During that time, because after COVID, only certain stocks made a move, right? And there are a lot of other stocks just completely tanked and lagging heavily. What happened was that in that great rotation phase in the last 5 months or so, ever since the S&P's been grinding like this, a lot of these lagging stocks came coming up, making a move. Again, sideways is not a bad thing. It's just digesting its gains. For long-term investors, the best thing we can ask for after a huge move, it's a sideways. Because long-term investors don't want to incur any losses. So after a huge move, moving sideways, that's fine. That's fine. So then you can move sideways and then continue on after that sideways move. Let's go to Nasdaq here. So Nasdaq, obviously Nasdaq, Apple, they're pretty much, if you just look at Apple here real quick, look at just how they look. They look pretty similar. I mean, they're just a little bit different, but you can see how just the way they've been trading, they look pretty similar. So let's quickly talk about Nasdaq here, and I'll go to Apple. So Nasdaq is just hanging around in this vicinity here, and this isn't a bad thing in the short term. Looks like this is the equal highs here, potentially some sort of inverted head and shoulder formation. Quickly, when I look at actually 65-minute chart on the Nasdaq, look at the oscillator actually crossed up on the Nasdaq. On Spider, it hasn't, but on the Nasdaq, we actually see the cross and that at that oversold vicinity. So let's come back here. And basically, right now, we're hanging around above this. This is important pivot, right? Because obviously, you can see that there's a prior resistance acting as new support. So buyers want to protect this level. Obviously, this gap is great that there's a gap here. This gap is going to provide good support. Even if this comes down, fill this gap, that's going to provide good support. We've got my long-term moving average residing in that vicinity. So I think if we can hold this level, 306, 300 level, there's a good chance that buyers want to get up here, fill this gap. And keep in mind, in the midterm of sense, do we want to give benefit of the doubt to the sellers or the buyers in the midterm? Right? We got that low. higher low, higher high. And we don't know for sure this is gonna be that higher low yet. Only way to confirm that that's in higher low is that this thing goes up and make higher high. But for now, it looks like there's a good bounce there. And in the short term, what's happened was that we don't have a lower high. This is what I labeled this as an eco high, and that's a first step to neutralizing that short-term downtrend into a consolidation phase. No longer in a downtrend because of the eco high. So what we need to do is we need to start cultivating that higher high and then doing something like this. Then potentially Nasdaq can get up here and fill this gap, pull back, and then make new highs. So let's go to Apple here real quick. So Apple's been obviously struggling, but Nasdaq's been struggling, so Apple's going to struggle with it. But keep in mind though, after Apple making, you know what I'm saying, since March lows here, we're talking 160% move. And you really gonna complain that Apple's breathing it easier, just kind of consolidating a little bit, right? We're not seeing a huge, big crash back down, but instead what we're seeing is we're kind of consolidating, we're digesting its gain. So we're seeing a bit of a steep correction. We're currently holding that pivot, and that's a lifeline for the current bulls on Apple. I think the good news about it is we got these gaps going to provide cushion. So one thing I can kind of see is potentially sometimes, you know, a stock like this could like to break below it and then kind of freak people out and then fill this gap before going back up. That might be one scenario. Or because we have this gap that's still open, right? We're currently retesting this right here. And this is the same level as on the Nasdaq right here. So that's this gap, right? When the Nasdaq gapped up, Apple also gapped up on that day. So the gap's still open. So let me put that line there like this. So that's going to be a current support. 191, 115. It would be better if the bulls can able to protect this gap because we got this bigger gap and then this gap and then that gap. So there's still a bullish pressure, buying pressure. You know what I'm saying? There's momentum in the midterm. It's just that in the short term, we're in a downtrend, right? We're in a downtrend. We got lower highs and lower lows. So basically, we need to kind of start getting up here, and then bulls want to fill this gap. So that rising pivot is going to be important. This gap's going to be important. It will be better if we keep this gap open. But if we can hold this above 119, even 115 or so, I think the worst case scenario, 110 or so, I think this will be the, like a worst case scenario. If we do see something like that, I think the Apple can potentially gap back up here. But again, you know, if you're a long-term investor in Apple, you've been buying at some of these lower levels, right? And this is something it's totally fine. It's the market moves sideways. Maybe these lows are some kind of a opportunity, maybe even to accumulate on some of those longs there. But Apple, obviously, you know, with the recent highs here, and this is kind of what the market is going to do. It can scare people out before making its move. That's why it's best not to chase when the stock has already made a big move like this. Because what's going to happen is many times, not always, but many times it's going to kind of want to have that consolidation phase, right? Let's go to gold here. So GLD, gold is making a little bit of traction to the upside after hitting my last level of Fibonacci here. And this is a level that I talked about last week. That's that current confluence zone there. That's the current pivot, prior resistance, prior support, and then potentially a current support there. We're still in a short to mid-term downtrend. We got lower highs and lower lows. So what we want to see is we want to see this in getting up here and then start cultivating it in its own higher lows and higher highs. We're far away from it. And as I look at my weekly chart, though, it is pretty extremely oversold. Not like too extreme, but we're pretty oversold at this point. So I think there's maybe this might be a chance. This might be the level that we might start seeing some traction there. But we'll see how this market plays out. I mean, at least the oversold bounce might be in store. Here's one last one here with the grayscale Bitcoin. So Bitcoin finally got up here. Fill this gap, and that's a good sign. We got another gap to fill. That gap must be filled. If that gap doesn't get filled, this gap right here, if that gap doesn't get filled, it could be a little bit of a negative bearish signal. If we start to kind of fall over and start cutting below this low here, after this gap does not fully get filled, we kind of cut this low, there's a chance this thing might want to come back down and even retest. And I think if we do, I don't want to see, if you're a bull here in Grayscale Bitcoin, you don't want to see Grayscale Bitcoin coming back down. Because that you want the momentum to continue. See that midterm moving average right here, midterm, right? You want that momentum to continue. Look at these moving averages. You see they're rising, they're flying. You want that momentum to continue. Once that momentum dies, right? If the stock or that price comes back down here, these moving averages are going to start to lose its momentum. And because Grayscale was at 11, is trading at what, 52s or something like that, this thing just made a 500% move. So because of this, you don't want that. This does not mean that it cannot go any higher, man. That's the thing about most people, what the people don't realize is, doesn't mean stock cannot keep going higher. It could, as long as they can keep that momentum going. But this gap must be filled, or gap it over will be the best case. Now we gap it over, it just don't even have to deal with the resistance level, because once the gap gets filled, you know what happens. It's going to act as resistance, come back down. So gap it over will be the best case scenario for the buyers. But if you start coming back down and then breaking below some of these lows, and you know what I'm saying, then you're going to start to lose this momentum, and that could be kind of a, at least short term, not short term, but initial warning signal. Just because of, you know, like Bitcoin already made such a big move, right? 500% move since the last like lows, or real major lows, right? And this, a lot of times what happens is people don't want to buy down here. People want to start buying. People are feeling like buying it up here. I'm still long here. I actually went long here. I bought more here, and then I got more here. So I've been actually accumulating in this vicinity on that. And this is where you want to be cautious. When nobody want to buy, when there's blood in the streets, that's when you start thinking about accumulating. When everybody start talking about it, when everybody start feeling like they want to buy Bitcoin, you start to be cautious about it. You guys enjoy your evening, and good luck trading next week.